Good morning, Tuesday, November 18th. I'm back in my familiar morning perch now, or my my perch is becoming more familiar because I'm doing these on a regular basis here. Got my tea with honey. I was thinking this morning that I learned something. I like to use organic food, organic products, um, and but if you use a metal spoon with honey, I've heard that it negatively impacts the active things in honey that help you. So I've been using uh, like a Whole Foods plastic spoon to stir up my hot tea with honey. So, not sure if there's a better solution, but I didn't realize that a metal spoon could harmfully impact honey. So, there's your tidbit of knowledge, and if I'm incorrect on that, let me know. Um, Today, this is episode three, the video episode three. We're going to talk about restoration hardware, RH, the K economy, Wayfair, um, Williams Sonoma. We're going to talk about earnings besides NVDA. I know I said I was going to delve into NVIDIA today. I think I'm going to do that tomorrow just because I went down the RH rabbit hole last night and this morning for hours. And I want to get some of that off my chest. And then I want to read Doctitus's post because that, you know, spurred a good discussion in chat. So, um, some housekeeping items to begin. I watched the Odd Lots or listened to the Odd Lots podcast with that Paul Kudrowski yesterday. Why AI bubble is like every bubble uh, all together into one. Really good. So listen to that. That's it's. Oh, I also my kids helped me. My boys, who are my youngest, 12 and 7, they actually helped me set up links to an Apple podcast. So I'm on Apple now and then Spotify. I'll post those. And uh, so that let's just delve right in. So last night there was some posts in chat on RH. This is one that I've bought all the way back in 2016. It's been a roller coaster ride. It's down actually 64.5% year to date in through Monday, November 17th in 2025. And it's strange because Wayfair, which caters to a different dynamic, is up 119% year to date, and then Williams Sonoma, which reports earnings on Wednesday after the close. So there's other earnings besides NVIDIA out there. Uh, it could be a catalyst. Williams Sonoma is down 3% for the year, so RH has just really imploded. And what's interesting about that is that um, last fiscal year they earned 573. Earnings estimates have come down this year to 894. They were just 1069 90 days ago, but still a 51% increase. And then for the next year, they're at 1273 now, down from 1450. More importantly, they're going to generate their 250 to 300 million in free cash flow. At least that's what they're guiding for. They generated over 80 million in free cash flow in their second quarter results, which were released September 11th. Their fiscal year is kind of strange. Um, second quarter released again on September 11th. So October, November. So they'll have their third quarter results sometime in December. It's going to be interesting if they're on track. Their market cap at this point is only 2.67 billion, and that's below the trailing 12-month sales of 3.4 billion. Their P ratio on a forward basis is like 11, so it's pretty cheap. They're still growing. Revenue this year is going to grow 10% versus last year, and next year it's estimated at 10%. How are they growing? They've redesigned their galleries, but they're opening new galleries. They just opened a gallery in Paris, to go along with the one in London. They've got one coming in Milan, which I was in Milan this summer. I was also in Paris this summer, in Venice and Rome, which was great. Positano too. I'll talk more about that. I should do a podcast on my summer trip, but they're going to open Milan and Madrid next year. But they're also opening galleries in the U.S. this year in Manhasset, which is, I guess, somewhere in New York. I've never been. San Diego, Detroit, and then Palm Springs. And so they're still in their growth phase, although their CapEx spending is winding down from the gallery transformation that they had been in. So it's RH elicits a lot of emotions from bulls and bears. Bears say it's high-end furniture in a housing market that's declining, and they took on debt to buy back stock, which they did here. They've done it twice meaningfully in their history. The first time worked remarkably well. In 2017, they bought a lot of stock back, almost 50% shares outstanding for like $50 a share. So even today at 140, that was a home run, buy. And then they did it again here in 2023 with an authorized purchase program in 2022. And they didn't buy it back as much stock. It was closer, I think, to 17%. But they have debt. They have some debt that matures in October of 2028. And so they leverage themselves. And the rationale, I think, from RH's side is that they believe that on a go-forward basis, they were going to grow. So the stock was pretty cheap. That's the rationale they used in 2017 and worked out, in spades. This time, earnings have grown, but not to the degree. They've had constant revisions. The slowing housing market has hurt, and they diversified somewhat. I think they own 21 restaurants now in their galleries. It's a significant part of their business. They have private jets. They have a yacht. They're trying to become the first American-born luxury brand, which the reward's enormous if they can achieve that. And they're still growing. There's still a big market opportunity. Again, the bears would say they have a limited demographic of people who can spend, $5,000 for a couch. And they're kind of going more to a Costco model where they have like 400,000 members now, and they get discounts on that, at RH. So it's to be determined how it's going to work out. But even through what I would characterize as a very difficult operating environment, they've spent CapEx, they're opening galleries, and they're laying the groundwork for what could be, a growth runway, especially if the housing market turns around. Interestingly, too, on the debt side, that debt is floating rate debt, so the interest rate, the Fed funds interest rate decreases helps them. And obviously, if the interest rate environment comes down enough, it could reliquefy the housing market. Now, I think we have a long way to go there, and I think I've kind of advocated that the yield curve is going to steepen, and so that would be more reliant on ARM purchases in the housing market. But I do think lower rates will help the housing market eventually here, and time goes by. But the housing market's very stagnant. I think there's home price declines in 39 out of 50 states. The rental market is declining too, so rental rates for apartments are declining. And, that gets into this K economy discussion. And the K economy is that, there's a very small percentage, I think 1% or 10% of the population owns like 90% of the stocks, 84% of real estate and 80% of land or something like that. So the K economy is that part is going up, like the K, and they're spending, that's 50% of consumer spending for that top 10%. But the bottom part of the K, is suffering, and you see that in restaurants, restaurant sales. You see it in the auto market, with CarMax and now Carvana starting to come under pressure. It's more nuanced than that, though. And again, if you look at what's happening with just RH, Wayfair, which is up, RH is down 64.5% year to date. Wayfair is up 119. Williams Sonoma is down 3. It's not. They're not all being impacted in the same way. So it's going to be interesting with Williams Sonoma's earnings on Wednesday, if that's a positive catalyst for RH. RH's earnings estimates have come down here consistently this year. So, Gary Friedman, who owns 25% of the stock, and he recently bought stock in like the 216 range. That was his last purchase. It's 140, 142, something like that pre-market here today. It's great that he's aligned that way. It's great that he bought stock at a higher price. It's, again, to be determined, will that work out? So NVDA, again, I'll just touch on it briefly. I'm going to go more in depth tomorrow. I plan on doing that today, but I went down the RH rabbit hole. and NVIDIA, when I wrote that article, over a year and a half ago, the the premise was that the enterprise value as a percentage of GDP had like doubled what Cisco was, and one of the main premises of that article. So Cisco was 5.5% of GDP in March of 2000, and NVIDIA got up to almost 12% of GDP in June of 2024. Market cap back then was 2.9 trillion. It's gone up. NVIDIA basically got to a 5 trillion market cap. It's come down. So that enterprise value as a percentage of GDP has even gotten worse. And I think that has to have a reversion to the mean to the downside. So again, just planting a seed for tomorrow. And then what I wanted to talk about last here today, before I get into my ending spiel, is that Doctitus had a post. I posted a link to the Horizon Kinetics third quarter commentary in our reading and podcast room. I encourage everybody to read that. You can just search that up. So Horizon Kinetics third quarter commentary on Google or wherever you look at the internet. Read that, and it's an excellent post. I think if you read their quarterly letters the last 4 or 5 years, it aligns with a lot of my thinking. They've done pretty well, as have we, and so it's weird because there's this perception that, and it has been difficult at times because it's hard to go outside of the Mag 7 or the 10 biggest stocks or the 20 biggest stocks, and if you're not in those, it feels like you're really missing out. However, it's been a great active stock picking environment. I mentioned that yesterday with Newmont, up over 100% this year, Deutsche Bank up. But there's been a lot of stocks. The Seco, it has done really well for us this year. The royalty company has done pretty well. I'm trying to think of the name. It's escaping me now. But the copper royalty company that Kai had on for the podcast, I'll circle around back to that. But obviously, all the precious metals things have done pretty well. International banks have done well. International ETFs like I mentioned the Italian ETF is up over 50% for the year. The Brazilian ETF has done well. There's been a lot of opportunity, and it just feels like sometimes you have to be in the these large cap tech stocks, but you don't, and that you really haven't had to be there, the last 5 years. Of course, if we could go back, you would want to be there in some ways. Like I bought Meta in 2022 when it had an 8% free cash flow yield, and I sold it for a 70% gain. That'd be over a 700% gain today. So again, my biggest mistakes are always selling too early in dollar terms. It's not the zeros that you inevitably come across, in the markets. But in response to that Horizon Kinetics third quarter commentary, Doctitus wrote this post, and I'm just going to read it, and then I'll talk about it more in chat and maybe bring it more up here. But I wanted to emphasize it because it brought up a good discussion and it made me think and made some others in our group think. So here's Doctitus from his November 13th post. He says, at last, an expert investor, Horizon Kinetics, has confirmed a particularly painful feature of this AI bubble, which is increases in invested dollars and the share price of the bubble stocks come from selling non-bubble stocks, lowering their share prices. And my impression is this has been true in spades for the hated energy sector since October of 2022. They say when such a great portion of the finite volume of investment funds that is available at any given time flows into one gravitational vortex of the market, great wording, Doctitus, in this era, the mega cap and IT stocks, there must necessarily be an investment funds volume deficit elsewhere. The shallows well away from the deep, crowded pool of the efficient marketplace. Many such areas, in fact, where valuations are distorted downward instead of upward. It has been doubly challenging since October of 2022 to continue to hold 95% of my original Antero shares from 2020. Awesome entry point, by the way, 2020. And to keep holding about 75% of my original Peabody shares as the market rubbed my nose in gains elsewhere and losses where I have maximal portfolio concentration. With so many pros saying natural gas prices must rise considerably, for example, GNR, HFIR, Citrini, Newberg, Celsius, and of course KCI Research. This has been my position for a long time, by the way, since 2020, that natural gas prices would eventually mean revert, to global natural gas prices. So in the U.S. and then what they are in Europe and Asia. The 3-year experience from hell appears to be on the cusp of reversing heavenward. I love the wording. That's I'm going to read that again. This 3-year experience from hell appears to be on the cusp of reversing heavenward. Thanks for this article, KCI Research, and for steadily pointing true north for our energy investments, which help me stay with the thesis despite major temptations to abandon it. Very well written, and it highlights a lot of the challenges of being a successful investor, especially being a very concentrated investor like Doctitus is, and like I have been in my investment career generally. And the analogy I like to use is if you're sitting in, I always think of, I used to go down to Naples a lot when I worked at Oxford, and sitting in Tamiami, sitting on traffic there. And it's just, you're tempted when one lane's moving to go to the next. And, I had an investment mentor of mine that I was driving, and he said that he's never met somebody who's so patient and yet can be so aggressive at the same time. And we were in the car, down there on Tamiami in Florida, and it is tempting sometimes you see the other lane moving and you want to move. However, it takes a certain discipline, and really that's what it is. It's discipline, doing the daily work, whether it's on a macro basis or from a company bottom up basis, to stay in your thesis and sit in your investments. And of course, there's tax consequences that come into that, and there's other factors that play a role. But the market, Mr. Market, is always going to offer you, as Doctitus says, temptations to abandon, what your investment thesis is. So, great post, great way to end. Hopefully everybody has a nice Tuesday. I'm going to get this out, and then I've got some things to do. I want to try to get a workout in with weights today. It's a sauna, and go on with my day. So I'm enjoying this experience. Have a great Tuesday. See you the next time I make a video post here. Take care.